I'm Allison LaForgia, managing editor of the content studio at HousingWire. Today, I'm joined by Pete Carroll, executive and head of public policy from CoreLogic. I'm excited to talk about the intersection of climate risk and affordable homeownership. And I think the easiest place to start is talking about how climate risk does intersect with homeownership affordability.
Oh, you bet. So, this is a topic that has definitely, I'd say, become high on the radar screens of most of our clients, particularly in light of what has been perceived as disruptions in the homeowners insurance industry, with increases in homeowners insurance premiums. Many reasons for that, which is a separate discussion. But I think what's important is that it has kind of served as a bit of a canary in the coal mine, in a sense, where it's really kind of sounding the alarm for many folks in the housing ecosystem that the risk of natural disasters and the impact they can have on losses to property in cost, damages and replacement cost to property it's here. Now we're going to move. Now people are starting to really think seriously about how do we move to a system that is designed around taking, a lot of the money that we spend on the back end, mopping up after these disasters and investing it up front in mitigation efforts and other resiliency initiatives that can really strengthen the built environment and try to lower the risk profile, which overall is just going to naturally help with affordability. First, we have a viewpoint at CoreLogic that you can only manage what you measure, and the technology is absolutely here today. CoreLogic has a suite of tools called climate risk analytics that are able to assess what the projected losses could be for any given property, losses to the collateral, to the value of the collateral, or really what the damages and the replacement costs would be to a given structure, and what that would look like on an annual basis. And what's important about that is you're ultimately running these models that are taking the best of backward-looking models that are historical and produce a very reliable assessments of what the risk looks like in the current state, and then taking industry best practices around climate risk modeling and applying those on top of those models, that you can start to simulate what different scenarios of climate change could look like and how that could affect the risk profile over time. So very exciting tools that have their specific uses. And good examples would be a lot of discussion around how can we look at building codes in a more subtle and adaptive manner. I could look at it from a low to moderate income census tract perspective and see how are these climate risks affecting low to moderate income homeowners and their equity, for an example. But more importantly, you could see where there are clusters of similar risks where you can build building codes that are, not one size fits all, but really kind of built to where the risks actually reside, so that we're really balancing putting in regulations that can help reduce the risk profile when we develop new homes, but balancing that against the very real reality we have, which is that we have a crisis of an undersupply of housing in general, but especially single family housing and homeownership.
Let's tie it all together. Let's talk about the importance of good property data when looking at risk modeling. How important is having good property data?
It's everything. I mean, you want to build very deep, big data reservoirs of property data to be able to really understand the risks, right? The richer the property data, the more reliable your risk assessments are going to be in these models, in these peril and climate models. And it starts with data about the parcel, the land, and the structure itself. And in the case of both the parcel and the structure, crucial information is the geospatial location, so the boundary of the parcel itself and the structure itself, and with good precision. And then the elevation of that structure. So we use a three-dimensional modeling technique to understand what the elevation of a given structure looks like in parcel relative to, say, sea level or water table. And this is or riverine levels. This is critical information because this gives you a very important data input called first floor height elevation, right? Knowing where that first floor height is relative to the ground and sea level or water level is going to give you the insight, a critical piece of insight into what the risk is of flood inundation into that basement and into that first floor, where the damages start to really build up as you get into that first floor. So, that's just one example. And then, I would say on the parcel side as well, I mean, the more information you have about the structure, first of all, is critical, right? Understanding as much as you can about what features and materials are used in the exterior, the interior, the roof, foundation. That's going to all influence what the risk of damage will be to that structure. And then the parcel itself, is there vegetation around that parcel? Would be a very good example, right? That's going to be a big determinant of wildfire risk. Whereas, a similar home 2 or 3, parcels down may not have that same vegetation, and may not be as nearly as much risk of, say, wildfire in that example. Those are the big issues. Then I would say also, lastly, construction costs would also be an important factor. Understanding at the local, very localized, what labor, equipment, and material costs are in the present, because that's going to really give you the accurate assessment of, once you understand the damages, what is it going to cost to make the fixes and replacements? What are the replacement costs to that damage that occurs as a result of the natural hazard? So, very important, I would say.
Very important. Pete, thank you so much for joining us today. To our audience, for more information, please check out the link below at CoreLogic.com for more information on climate analytics and the things that we spoke about today.